Hey everybody, this is Jim at SB500chart.com. It's Sunday, a little bit after 6 o'clock on March 29th, 2020. We're going to take a look at the chart, see what happened the week ending March 27th. Before we do that, as always, I need to remind you the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Looking here on a 30-minute chart, here you can see where we were, up around 3,400, that initial sell-off right here. That got us underneath the neckline of that really big inverted head and shoulders pattern. This red zone here that's actually pink. This is where the deeper we get into this, the more we give up on that inverted head and shoulders pattern. And around the second week of March, we gave up on that pattern. So in other words, it failed under the stress of the coronavirus issue. Still, it's interesting to note that many trend lines are still working quite well. This line is working, this line was working, even this one that was established back here in the latter part of February, it was back tested repeatedly in the middle of March. And now here we are after a strong week. If we look at it on a weekly candle, and zoom in, there is our week right there. It completely engulfed the previous week's candle. So you could say that's sort of a bullish engulfing pattern. However, when you talk about candlesticks, you need a second candle for confirmation. So that means we would need to be up again this week, and you can see that we put the brakes on right at this rising trend line here. So as we saw that nice gain for the week, we came exactly up to that blue rising trend line and got no further. I mentioned also this line of support that had broken down for about 2 weeks. We actually traded underneath it. We mentioned that a descending line of support, when it's been broken to the downside, it's not difficult for things to get back over that line, and we did. We closed over it on Thursday, and we closed over it on Friday. Looking at the futures markets right now, shortly after 6 p.m., if the markets were to open this moment, we would be back under that line, by probably a couple of percent. But it's Sunday night. Who knows where we're actually going to end up with the futures by the time we get into the morning hours, especially close to the open. So this descending broadening pattern here, this past week, we broke up out of that pattern. We gapped up on Tuesday, continued up Wednesday and Thursday for the first 3 days of consecutive gains in a while. Did give up about 3.3% on Friday, but you can see from the technical picture, nothing really changes between Friday and Thursday. So I'm not going to try to put a short-term trend line on this, because if I do, it's going to be so steep that by the time I get finished drawing it, it likely will have been broken. So instead, I'm just going to kind of let this thing play out for a bit more, with the idea that we may be putting in some kind of bottom here. Now, one thing to keep a watch for. In a significant downward move, it's not unusual to see a symmetrical triangle form and then that move to continue down. We did that in the winter, and actually I think that was the fall of 2008. If my memory serves me correctly, when the S&P was coming unglued, we made almost a perfect little symmetrical triangle, and then that broke to the downside, and that's what led to that all-time, well, not all-time, but that's what led to the move down into the 600s for the S&P. So we got a number of things to watch out for. I mean, it looks like this could be a bullish pattern in development here, but we really need to get over this blue line that we've taken out decisively. So that's going to be, I think that's the thing to watch. If we can get over this blue line, then of course over this gray line, remember this gray line right here, I'm going to change the color a bit. What color shall I make it? Let's make it kind of a dark turquoise. This line right here, if we go back, you can see where that's drawn. It's drawn from the highs of the third week of February through the momentary recovery we had on the 4th of March. And there it is right there. So we need to get back over both of these. And if we can do that, then there could be, as one person said, this could end up being the shortest bear market in the history of the markets. I'm not ready to say that yet. I need to see more in relation to this line and this line here. But if we can get up over those, that could actually be the case. And remember, this is news driven. This is not driven from the technical inevitability that you often see at market tops. This is being driven by panic, and that is as a result of the coronavirus news. So there you see it. It looks like a perfect tag there. Then coming back down to this line, finding a little support. And of course, what happened late Friday? Well, people don't want to hold their positions over the weekend. And in this particular case, what does it tell you? Well, the people don't want to hold their long positions. That sort of tells me that the market right now is switching over to net long, whereas at one point we were seeing some strong rallies on Fridays, like back here on the 13th. We saw a bit of a rally here. Wait a minute, 13th. Oh, never mind. But the basic idea being that late Friday reaction is often indicative of what the net sentiment in the markets is. And for this past week, it was bullish. And that's why people still didn't want to carry their bullish positions over the weekend. So, all I can say is no super strong sense, but if we have another up week in the week ahead, then I think things could certainly get interesting. And here we are now, after having been down as low as almost about 2,200. All of a sudden this week, we've put on about 350 points, roughly. So if we have another week where we can gain a couple hundred points, all of a sudden we're starting to get back to some areas where maybe this thing is salvageable. But at this point, simply too early to make that kind of call. So anyway, I think I'm just going to leave it at that. The news is going to drive this thing for a bit longer, but we got some pretty decent trend lines on this chart. So let's just keep watching it together. And I do want to encourage you, do what your local government officials are recommending as far as staying in sheltering in place if that's been issued where you are. Stay safe, be smart, don't panic, but be smart. Thanks for watching, and thanks for your support.